All right, thanks, Eric, and thanks for everybody again. Thank you for coming. I know it's not a fun day to drive, or not as fun as it could be. We'll get started. First, we're going to start with a little bit about system requirements, and then go into manufacturing for those of you that have that. Talk a little bit about project or field service or whatever other models that might be out there. Then go into sales order processing, purchase orders, and inventory. With regards to system requirements, the first thing you want to do is to verify your SQL jobs. We'll be talking about backups often. For those of you that are in payroll, it's going to be a repeat on some of this, but if OTT did your SQL install, we usually set up jobs that will do re-indexing, which is done on a Sunday night, Saturday morning, or Sunday morning, Saturday night, however you want to call that, early AM and Sundays. And then we also create a job that will be database backups. So in my case here, I've got a GP daily backup, and then my system weekly maintenance will include my SQL database backup. So like the MSDB, the master, tempDB, there's another one that I'm forgetting right now. But and then also the transaction logs. The transaction logs will run every 2 hours. We set those up generally during the week, Monday through Friday, and then run every 2 hours. And what those allow you to do is a point-in-time restore. So if something crashes or burns during the day, you can restore it to a point in time. So if you realize a posting interruption at 1:30, you can restore to 1:15 or right before that batch if you have those transaction log backups. And a good way to test your backup and restore functionality is to create a test company and then restore your live into your test. So you don't have to interrupt your live company to say, stay out for 15 minutes while we restore. You can create a test company, and then you can go into your test company and validate that the restore worked correctly. And generally you can take last night's backup and do that restore. The next thing to do is to verify that your tape backups are working. Generally, the SQL backups will back things up to a hard drive, and or an external drive or whatever type of drive, and then your tape backups would grab it from the drives, and then those are taken off site generally, or however your process is. And that you'll want to check with your IT staff as far as if your tape backups are working and or actually have data on them. So. And third thing on the system requirements is to verify the size of transaction log files. Those transaction log backups, as you do transactions, I kind of have here's a screenshot of my databases in MySQL. These LDF files, also for example, the DYNE2 is my Dynamics database log file, and it's the same size as the data, or even actually larger in this case. So they really don't need to be much larger than 50 or 100 megs. So if your drive server has limited drive space, I know you guys have an issue with that, is to check those log file sizes, and we can shrink those to free up a little bit of space. And it's something you may need to do on a regular basis also. And these system requirement things can be done as soon as you get back. You don't have to wait for your end process to start. So let's move on to the modular processes. We'll start with manufacturing. So if you have manufacturing, field service, project. Anybody have project? Good. I don't know a lot about that one, so I can't. So as far as manufacturing, what you want to do here, there really isn't a predefined procedure for manufacturing or Horizons or any other manufacturing solution that you have. What we're going to walk through here is going to be just steps that you do on a monthly basis or for period ending. So the first thing to do is to process any transactions that you want to include into 2014. So this is a GP manufacturing issue screen. So any issue transactions that you want to do, any labor data collection that you want to include. Here's an MO receipt table or window. There we go. Any MO receipts or posting of work orders. Anybody have field service? Okay. We'll skip over those then too then. Or if you have bill of materials, manufacturing, any manufacturing or bill of materials type transactions that you want to include. Also RMAs, any RMA processing that you want to do. And the reason being is they'll feed into inventory, sales order processing, et cetera, et cetera. So they'll feed into those other modules that we'll be talking about. Next, we'll move on to sales order processing. And again, there's no predefined procedure to close the year in sales order processing. If you're following along, I'm in the top of page 5 or middle of page 5. Again, there's no predefined year-end closing for sales order processing. That's the things that you would do on a regular month-end basis. So first you want to do is process your any sales transactions. Here's the series posting. I guess in this window you wouldn't want to click Mark All because it includes receivables batches as well. You can go into that window and process any invoice or return transactions. You can go into the sales batch entry. In this window you can print edit lists if you prefer prior to posting. If there's any situations where you would need to put in 2015 transactions prior to posting your 2014 invoices, create a batch with 2015 and then just hold them there until you've got your sales order processing and purchase order and inventory closed out. Then post them once you're ready to open up 2015. So just keep them in a separate batch. After you've got your transactions posted, the next step is to reconcile your sales documents. There we go. And the reconcile, I'll repeat this a couple times, but if you're reconciling your distribution modules, remember SPI, sales order, purchase order, inventory, SPI, is the process or the order that you'd want to process them. Reconciling sales documents will some extended prices to verify the document subtotals, verify quantities, remaining quantities, and verify all quantities on all the document types. And it verifies the remaining subtotal on the sales document detail entry. This could happen during the year. I had a tech call one time, a couple months ago, where their total didn't say the correct amount, so we just ran in this reconcile process and it corrected the subtotal amount and the total amount of the document. So it can be fixed, it can fix things throughout the year. In this case, you would just leave it at all and then just click process. If you're gun shy and you're not sure if it's going to, you're not sure about running a reconcile, you can click the print report only, so it kind of gives you a preview of what's going to happen. This window has a dual purpose also, so it's also the next step on bottom page 6 there where it says remove completed sales documents. Every year I bring this up, it should say move completed sales documents because it's not removing anything, it's moving it from the open file to history. And in sales order, the normal flow of things would be a sales order gets transferred to an invoice and that order goes to history. Well, there could be some cases where you have a customer that changes their mind, don't want to order, and you end up canceling those quantities. Well, that order will stay out there forever unless you go in and run this process to clear things up. The same thing would hold true on quotes. So it's a way to kind of keep your open or work tables cleared up or cleaned up. So moving along, number 4 on number 7, or page 7 I should say. The next step is to print any reports that you might want to hold. On a month-end basis you probably wouldn't print reports necessarily other than your regular sales reports that you print for reporting. But at year-end, you might want to consider possibly an open order or an open back order report. A couple years ago, we had a request from a customer that on the tech line that they needed to know what their open back orders were at year-end. Well, this is March or April, so there was no way to historically get that. So we couldn't help them out in that scenario. But it's something where you might want to check with your auditors and just see what type of reports or what kind of information they might want to know, so that way you can plan ahead and print off anything that you can't historically get at year end, if that makes sense to everybody. I can't think of anything else other than an open order or open back order report that you might want to do. Maybe a document status, possibly. It kind of gives you the status of all the documents. Number 5 on the bottom of page 7, if you're going to remove history, make a backup. And again, we talked a little bit about backups and the payroll module. There's going to be lots of backups throughout this report. Just kind of use common sense, and if you need to restore, you're going to have to redo whatever you do after those steps. So if you go through all of the steps and just do one backup at the end, you'll have to restore, and then you'd have to go through all the steps again. So depending on how long it takes, and it also depends on your drive space. If you have tons of drive space and it takes 3 minutes to do a backup, then go ahead. If it takes a half an hour to do a backup, you may not want to do as many and just kind of plan around that. If you're going to remove history, I would recommend a backup here. We've had a couple of instances where customers have removed history, either in rush or for whatever reason they forgot to insert their restrictions, so they ended up removing everything. In the one case here last year or a year ago, the only backup they had was from 2 months prior, so they lost the 2 months right before this happened. So always make a backup if you're going to remove history. And it's quite, just to kind of anticipate a question, why would you want to remove history? If you're in transactions by customer inquiry or transactions by payables, for when Lisa talks later, and if it's taken a long time for those inquiry windows to load or a long time to run reports, you probably have a lot of history. So that's where you might want to consider removing history. It'll speed up those inquiries, the reports. The other reason is, one of the first, the 3 steps of removing history that I have is like, what do you remove? What I usually recommend is you ask around to all the people that would be looking at sales history and ask them how far back do they look. Is it just 2 years, 4 years, 5 years? If you have 15 years of history and nobody looks back further than 5 years, why do you keep that extra history if it's slowing things down for the company? So I always would say in that scenario, if they just look back 5 years, you just add 1 more year for error or just in case, and then just remove everything prior to that. The second thing that I would do when you're removing history is take your time. If those companies had taken their time when they were inserting restrictions and made sure that they had a restriction before they clicked process, they wouldn't have lost all their history. So do it when you're not going to get interrupted on a weekend or a night. Come in for a couple hours and start it or do whatever. But do it when you can take your time and not get interrupted, so that you can pay attention to what you're doing. And then third, keep track of what you're removing. In sales order processing, the ranges that we can include are document date is one of the options. In purchase order, it's just by purchase order number. So have a spreadsheet or some way of keeping track of what you've removed in each of the different areas. The other thing is when you do remove history, it'll prompt you for a report, and you can print that report to file. So even though you're removing history, you can still access it. You can print it to a text or an HTML. It's not a pretty report, but it is still readable, so that you can still look something up if you have to in that case. And not to sell ISV solutions, but there is another one out there from isn't it, Corporate Renaissance. It's called Data Archive, or Company Data Archive. So it allows you to create a historical company, and it moves stuff from your live company to this historical company. So that way it still speeds up your data, but it also gives you the ability to look at that data in GP in a different company. And then the last step in there is make a final backup. Again, after you've removed history and you validated everything's fine, you don't necessarily have to do a backup after that. All right, let's move on to purchase order. Are there any questions so far? All right. Purchase order processing. Again, there's not any procedure for closing the year. It's just the steps that you would probably go through on a monthly basis or a period end basis. So the first step is, sound like a broken record, but process and post all your transactions that you want to get included. So with regards to purchase order, it's going to be any receipts, any shipments that you want to receive, any invoice matching, any return that you want to process. And again, you have the, you can use the series post window or the batch entry window, the purchasing batches, for processing your shipments or invoices. And then your returns is in a separate window, the returns batch entry. And then we're now going to be on the bottom of page 9 for the next step, if you're following along. And that's to do the reconcile after you've got everything posted. And again, it's SPI, sales order, purchase order, inventory. And you do is, excuse me, you just leave it at all and just go ahead and process. And the PO, or the purchase order reconcile, will recalculate and adjust as needed. The other thing to keep in mind with reconciles is it will change data on documents, so, or it can, I should say. The document quantities canceled is calculated, the document subtotals, extended costs and remaining quantities, remaining purchase order subtotals, the document, PO document level and line item statuses are calculated. Also the line item extended cost, and then your discounts if there's any that are applied to that. And again, that's another tool that you can use throughout the time. If there's a PO that looks weird or has got funky data, you could run that process to see if it fixes it up. Step 3 on page 10 is again the remove completed purchase orders. And what this will do is remove any of your purchase orders from the open table to a historical table. So I'll show you kind of how that will look. You don't have to put in your ranges. You can use plug in anything to give you a range. So 0 to Z will include everything. And if I look on the restrictions, it's going to show me a list of all of the purchase orders that fall into that range. So these are all of the closed or canceled POs that I have out there. And then when I click process, then it will move those all from the open table to historical. And if you have any concerns about removing those, you can still print POs. Even if they're in history, you can print a PO from history. So it's a good cleanup or cleaning house kind of task to do. And it wouldn't necessarily have to be at year end. If you do 20, 30, 40, 50 POs a week or in a month, it's something you'll want to do weekly or monthly too to kind of keep it cleaned up. All right, on the top of page 11, print any additional reports. In sales, we didn't have anything that was recommended. In purchasing, we do have one that you should probably or most likely are using, the receive not invoiced. This will, printing this on a monthly basis will tie to your accrued purchases account and the GL level at your controlling document. So this should match your GL, assuming all the posting is completed. And you can sort it by PO. The default is PO. You can also sort it by vendor if you choose to do so. I'll give you a quick look at that. So if we go to the bottom of this, it'll give us a report total. So that 110,980 would be what my GL should have as an accrued purchases. They have pretty poor accounting procedures here at Fabricam, so it wouldn't tie out very well. As far as additional reports, I guess it kind of goes back to talking with your auditors. Maybe a purchase order status report might be another one that you might want to consider at year end. That way you know what the status was as of the year end close. Other than that, there's probably not much else that I can recommend or think of That would be an important one to print off. Whoops. That PO, the purchase order status one, is the other one that I would consider running. And again, you can poke around a little bit and run a small range of a report to see what's included, to see if it's something that you might want to have or think about keeping. Step 5 in purchasing is, again, make a backup if you're going to remove history. And again, if you're going to remove history, it's recommended, highly recommended, just in case you forget to plug a restriction in there and you remove everything. So that's a good net to have, just in case. And then once you have your backup completed, if you're removing history, then you remove the history. This is what the remove purchasing history window looks like. I have 2013 R2, so if you don't have that, you're going to recognize a couple things on here that you wouldn't see, like the purchase requisition. That's a different topic for another day. But you can do a research. You can limit your purchasing history. You can probably leave, if you want, you could leave purchase orders out there. Maybe just get rid of receipt information, or maybe you just want to keep both of those and just get rid of your account distributions and journal history, because your distributions would be at the GL level, so you wouldn't need to have those attached to the purchasing documents. And again, with the removal of history, if you have a lot of history that you're removing, it'll take quite a while to generate. So you can do the print report only, so if you wanted to do the preview, but if you have to wait 3 hours for it to run, you might want to try it in a test company first and see how it looks, or just go ahead and remove history and see what happens, just to see that certain reports would run and how it will work for you. And again, remove your, take your time and then keep track of what you're removing too. So that's, then make a final backup if you choose to do so after purchasing. So then at this point in the process, you would have closed all your work orders, issued all the materials, done your labor transactions, posted all your invoices, returns that you needed to include, received all your shipments, done all your PO returns, matched up your invoices in purchase order. And even though that's an accounts payable function generally, the matching, if you do match invoices, it can change your inventory value. So it's probably something you'd want to make sure that you get completed as part of your purchasing process, because if you leave it for payables, you'll have already closed the inventory, so it could change your inventory value after the fact. So that's probably one thing that you'd want to try to accelerate if you can. And then if there's any other inventory transactions you would have, like any engineering or I guess I can't think of any other types of write-offs that you would do on a regular basis for inventory right off the top of my head, but that's the most common, is engineering type transactions. You want to make sure that those are included and posted at this step too. So. And the same thing would hold true here with inventory as it did in some of the other modules. If you have some 2015 transactions and you haven't posted all your 2014, you'll want to just put them in a batch and hold them out there. You'll still have an allocation, but it will be still included in your on hand. And there is a year-end closing process for inventory, so that's different than what we've come across with sales and purchasing. The next step after you've posted all your transaction, going to page 13 now, is to do the inventory reconcile. And the inventory reconcile will, I think many of you that have inventory have done a reconcile because things have gotten out of kilter for whatever reason. You have negative allocations, or your quantity on hand isn't correct, or something along that line. And doing an inventory reconcile will go out and recalculate that number. Again, remember SPI, sales order, purchase order, inventory. If it's just a quantity on hand, generally you just need to do the inventory, but if you have things out of whack, then you'll want to, like allocations, for example, you'd want to run all three. And the inventory reconcile, what is reconciled? The main table for a reconcile is the purchase receipts table. At first we'll look at the serial, it'll compare the purchase receipts table with the serial number and the lot number table. Then it looks and compares the purchase receipts with the item quantities master table. Then it takes a look at your transaction tables like in sales order, purchase order, inventory. I assume manufacturing is included, although it doesn't say it on this document. And then the next thing is the on order, or the purchasing quantities are looked at to compare it for the item quantity master, the on order quantities. And then the last step is to make sure that if you have multiple sites, that the individual sites total up to be the all sites quantity. So for example, if you have two sites, one has 10 and the other has 5, that your all sites on hand is 15, for example. Okay. After your reconcile is completed, your next step is to do a complete physical inventory. And we're now on the top of page 14 or bottom of 13. Does everybody know what cycle counting is? Is everybody familiar with the term? The one thing that I'll add to cycle counting, the whole idea behind cycle counting is not to just more often write off quantities to make sure that your inventory is accurate. So instead of writing off 100 at the end of the year, you're writing off 10 every, for 10 months of the year. The idea behind cycle counting is to go in and determine the root cause of the discrepancy so that you can get a more accurate inventory. And the reason behind that is if you can get a strong cycle counting program going, then maybe you can talk to your auditors. They'll let you get by without doing a physical inventory, because I'm sure everybody loves to go in on New Year's Eve or the end of the year and do a physical inventory or shut down for a week. I've heard of that happening too. So maybe your auditors will let you get by without a physical by doing that. All right, so then there's a couple different ways to do a physical inventory in GP. First we'll start with the slack count or the cycle counts method. One thing to mention about this is if you do cycle counting and you want to use the stock count feature like this window, items can only be on one count at a time, so you may have to delete other counts and then recreate them after the fact to do a year-end physical. But it's pretty quick to set these up too. So, so I did this one. You can go into the mass add and you have a number of different ranges. So you can do it by ABC code, item class, an item number range, or let's see, there was a couple others here. Oops, forgot some of the others. Oh, by site. So I probably just did mine, but the site just did the warehouse to warehouse, and it'll bring in your items that fit with that. And then when I click Start Count, this would, keep in mind this is going to be when you've got all your transactions posted. You got things at kind of a standstill. It'll let you print your count sheets, and you can choose the options that you want to include on your forms. If you trust your counters to print on-hand quantities or lot and serialized items. We'll include both. Oops. So this is going to be kind of how your stock count forms will look. That's the exception report. I don't know that I've ever seen anything on the exception report, so I can't remember what really is included on that exception report. So this first item is a serialized item, so it shows that we have 27 on hand, and then it lists all the serial numbers underneath that, and so on and so on. We'll go down and show a lot numbered. So the YRSC here has a lot numbered item. So at that point then, you would go out and do your stock count, or you do your actual physical count and compare it to those numbers. And then once you get all your count sheets back in, then you can go to your stock count entry window, pull up your count that you've started. And if you don't have serialized or lot numbered items, it's pretty quick to enter these in, because you can just do you can use an arrow key. Well, in this case it would, with serialized and lot numbers, it'll ask you to validate that the serial numbers exist, and then if there is a lot number, it'll ask you to verify the quantities and the lots that exist, which makes sense. We're going to continue beyond this one. So it's getting mad at me because I didn't know I enter in. So it automatically calculates the variance. That's kind of the point I wanted to show. Is, and if you go down to ones without a lot or serialized, you would just be able to 10 key them right down. So it would go fairly quick. And you can clear your count if you don't. The other benefit to that is it's frozen your quantity in GP too. So after you started that count, it's a frozen quantity. So you can take a couple days to do your count and then come back and do it. It's frozen quantity. So you could, after you've counted the items, you could start filling stock or fulfilling sales orders or something along that line, or pulling inventory for manufacturing. So maybe you have a count sheet up and you pulled up one piece afterwards. So if you have to go back and recount, then you have something out there showing you what was pulled after the initial count. The other method, it would be, it's called the physical inventory checklist. And that one, this one I won't show any quantities or anything, but it just gives you one line for each item. So if we go, using my green phone, if I have 27 on hand, not a lot of space to write the serial numbers in there, but maybe you come up with another way to have a, do an Excel count sheet or whatever be the case for some of those items. With this method then, to enter in, you have to compare the counted quantity with the on hand and calculate an adjustment. So if you're short, you have to write off some inventory. If you're over, then you have to write in some inventory. And you do that through the inventory transaction window, which is one that you're all familiar with if you're using inventory. So the other thing that I'd recommend if you're using this window is to use the variance type transaction. The reason being is any kind of, I'm a big fan of having a reason behind something when you're doing it. So variance types transactions should be all of your inventory discrepancy types, because if you're using any kind of manufacturing solution, they come through as adjustments. So that way, when you pull up a variance type transaction, you know it's for some kind of a cycle counting or some kind of an inventory discrepancy adjustment that you're doing. So to help you narrow down if you're having issues with inventory levels or accuracy. What method's the best way to go? It really kind of depends on your own system. I've got you have companies that do both methods. If I can pick on you guys a little bit. In the past, I'm not sure if you guys still do it, but in the past, the previous regime would always do the physical inventory checklist, because they had 8,000 items, of which there was 4,000 with quantities, give or take, numbers of hundreds or thousands. But they usually only had like 400 or 300 or 500 that were where they had to do adjustments or whatever. So instead of entering 5,000 items, they would manually calculate the difference of the 400 or 500 and do the inventory adjustment. So they use the physical inventory checklist. Another company of mine has 300 or 400 items, but they're all lot numbered. So they use the stock count feature. Just even though they have a pretty accurate inventory, they still want to validate serial numbers, because those get out of whack, or lot numbers. The quantities on a certain lot might be out of whack. So that way they go through and verify everything that way. So there's not a right or wrong for either method. It's what works best and is the most efficient for your company to do. So, questions so far on anything else? Next step is to print any additional reports. If you implemented after Service Pack 4 and GP10, then you would have a report called the HITB, or the Historical Inventory Trial Balance. For those of you familiar with the payables and receivables historical age trial balance, it's really similar to those. If you implemented prior to that, you can roll this out, but there are some steps, and we can talk about that separately if you're interested. That's a report that you could print, but on the flip side, if you have that HITB available, you don't really need to have a stock status. Is kind of where I was headed with that. But you can do like maybe a turnover report might be something you might want to print at year end. Purchase receipts report, so if you're going to remove purchase receipts layers, which we'll talk about in a little bit, that might be something you'd want to print off. Serial or lot numbered reports if you have serial or lot numbered items. And the rest of it's kind of dependent on your business requirements or your process. If there's something that's important, maybe to have a year-end snapshot of where things are at. Page 15 through 16 are kind of just summarizing different reports that you might want to print off in the different areas and how to get to them. Making a backup is step 5 on page 16. If there is a year-end close, process and inventory, we'll go through it a little bit so you can determine whether you want to do a backup. It changes a few fields. My personal opinion would be that it's not really worth a backup, but it depends on how important those fields are to you if you're using them. So the year-end closing window is this one here. So I'm going to be flipping over to page 17. By pressing the close year in inventory, what it does is it'll summarize or transfers all your summarized quantity costs and sales amounts to transaction history. So for example, this window here, the item history, so if we'll pick on our green phone again. So in this company, or Fabricam, we've never closed the year in inventory because it will take this top section here, the sales quantity, cost and amount, and move it to last year. So if you've never closed inventory and you want to start this year, all of those are going to go into last year, so it's going to be the last X amount of years instead of the last year. But then going forward, you would start accumulating that number. So that's one of the things that will get moved over. It will also, well, there's not a window to show, but it takes the items beginning quantity is assigned as the quantity on hand at each site. So wherever you're, after your physical count, whatever your on hand quantity will become the beginning quantity. So if you were on that turnover report, that's the number that you use to calculate turnover. It will also, on the item quantities window, the quantity sold field here, where my arrow's at, that gets zeroed out. And then if we go back to our year-end close window, the purchase receipts that have completely sold prior to the date entered, which is this third checkbox down, there's one date that handles both of those, so you can't do those independently. If you're using standard cost and GP, you can remove certain layers of standard costs, or if you don't care about the standard costs 5 years ago, you can remove that, although then you would also be removing receipts. You can also remove discontinued items and lot attributes if you're using lot attributes, and then updates the standard cost. If you're using standard cost and you don't have manufacturing installed, then or 2013, I would probably recommend, or come and see me. So to go into further detail, so let's take a look at the purchase receipts inquiry. This is my favorite inventory window, so you can get a lot of information from here. Gives you all of your layers, so it gives you all of your incoming. So going back to removal of layers, anything that's got, you know, the quantity sold and equal the quantity received as a completed layer. So those would be, if you plug in a date, you could remove anything, all of those completed layers. So in this case, our completed layers go through March of 2016. So if we wanted to, we could remove that. Or maybe we just want to remove the 2015 and earlier, which would be this one right here. So in this window you can see, you can drill back on all of the receipts and all of the quantity sold to make up those numbers that increases and decreases. And it also, it also gives you the cost. So I guess if that's the important part, if you're an actual cost company and you remove receipts layers, you can see the cost of the different layers in this window. That's why it's a neat window to me. So if we go back to our year-end closing, the removal of discontinued items, if you mark that box, as long as there's not a quantity on hand and it's not on any unposted transactions, so a purchase order or a sales order or an inventory, it'll remove it completely from inventory. However, your sales reporting will still have that item number listed. You just wouldn't be able to drill back to the item master for it, or the item maintenance window. The remove sold receipts and cost change history, it'll, like I said, it'll take whatever date you plug in here, will remove everything prior to that date. Anybody use average perpetual and have inventory? Okay. All right, so then once you, there is no inventory report, year-end closing. You can click process, but it wouldn't print out a report for it. It'll just go ahead and move all of those fields or clear those fields depending on the field that we were talking about. And once you have that done, then you can choose to go in here to close your fiscal periods. Normally you can go in here and close these month by month. You can go into the mass close too, so if you have, I can see this for financial, so where you might want to, I'll let Lisa talk about it, but you can turn off certain periods and transaction types if you want. So just to shut down, instead of close the whole inventory module, maybe you want to leave transaction entry open for that last closing adjustment type of thing. And then after you've done that, then if you're going to remove history again, make a backup prior to. Determine what you want to remove, take your time, and then document what you removed if you're removing history. The inventory window is similar to the sales order processing one, so you can choose to just remove distributions. I guess it does remove everything. Never mind. Don't have as much choice here on this one. But you can do it by document date, document number, document type. So maybe you, yeah. Okay. All right, moving over to page 19, make a final backup if you will. And like I said, I don't see a reason to do a backup for inventory. So unless those item history fields are important, the summarized things or the sales, I don't see a need to do a backup. There's some year-end tips and tricks and a Q&A. The Q&A probably doesn't apply because it has to do with that standard cost. And also the tips and tricks, it just mentions there isn't a year-end closing report. And the one thing I will point out is year-end close must be done before any transactions for the new year have been posted. So I know in distribution companies that's a tough thing to do, but if you don't close your inventory until X amount of time, all of those fields will get updated if you depend on the quantity sold or the well, yeah, the quantity sold, I guess, would be like your components or finished goods, would apply to that if you're manufacturing. Any questions on anything? least related to what I talked about. All right, well, thanks again for coming. I guess you got an extra 5 minutes of break now, so.